So today we are going to start using a new financial simulator, the portfolio risk management. If you go to basaga.org, here you can see the portfolio risk management. It is the name of the game. We are actually not going to do anything with portfolios here. But the game is made for students to learn the main how to say, the main terminology and methods which are used in portfolio management. And I'm going to send you as a homework. I'm going to send you some instructions in English, but the instructions are as follows. You can see I'm going to give you the instructions how to start the game, how to play it right now. But even if you have missed it, there are video instructions, and actually I'm recording the video instructions currently as well. So you will be able to see them in whatever language is useful for you. Then you start the game. When you start the game, as a name, first of all, number of players, number of accounts. We are going to have one account. You type in your faculty number, and as long as you have your name, I'm going to type my faculty number because I remember it well, but you will have to type your own, of course. Okay. And when you're asked for the level, you should start level 1. This is what we are playing today, actually this week. And then you click start. And this is where we have our game started. First things first, you need to see that we are using the game the game that we started is with orange lines. If we are with the orange lines, then everything is fine. If we are not with orange lines, we have to you have to restart the game. Second of all, after you play the game, you make your screenshot. The screenshot from which I want you to make is on the portfolio screen. I'm going to explain many things, but first things first. Because here we can see what is your score, and I can see your name and faculty number, which is why I want you to use this. I want you to use this screen as a screenshot. And also, if you go here with the mouse, we are not going to use the mouse for the playing of the game. But if you come here and click and right click, you can save the image, and you're actually taking a screenshot here. Okay, and once you have this, you name the screenshot the way I want it to be. So faculty number, first name, second name, PRM1.jpg, and then you upload the screenshot here at this link. Actually, I'm going to send a translated version of these instructions as in the announcement. And here I'm going to, of course, remake the leaderboard. I'm going to leave the leaderboard with these boundaries for your points. But one thing that is important, and this is what I want you to do, is that I want you to input your scores at 11th, 21st, 31st, 41st, and 51st week. And the 51st is really the one that we are measuring. When you upload your 51st week, you upload your screenshot as well. And for all the others, you just type in the number. You don't need to upload the screenshot. Okay, so from now on, I'm going to show you how to play the game. In this game, you move with the arrow buttons from left to right, and you go to the whatever you want to do, whatever menu you want to do, and you execute it with enter. Okay. So this is how we are doing it. I go there and I click enter, and I can see whatever I want. Okay, so starting from the first screen, here you can see again a table, a subset of all the possible companies that you can trade on the stock exchange. This is just 10 companies here. Again, every new run of the game will give you additional, actually different set of companies and different scenarios, and you're basically going into a different parallel universe. So if something happens in one game, it's not going to repeat in another game. Okay. So what we have here, we have a little bit more complex table than what we had in the stock market game. First of all, we have the company names, and also in the brackets we can see the ticker abbreviation for the current company. So International Business Machine has a ticker of IBM. You need to remember them because, but you get very quickly you'll get used to them because we are. You're going to work with them often. Okay, so this is this column. Another two columns is the yearly for the previous 52 weeks. So 1 week is a one turn in this game. So for the previous 52 turns, what is the highest and the lowest price level for this company? So for this share. So it is between, for example, for McDonald's, is between 80 and something and 61 and something. And this is kind of just reference, but at least you now know some prehistory before what has happened so far. So we can look at the history and we can still think about the future. Also, in this game, the companies will not bankrupt, and the companies will not go into splits. So this is out of the game. The companies might go to paying dividends, but they are not going to be as huge as in the stock market game. Okay, next column is the promised dividend. One thing that we should know, we are going to turn our attention to shares when when the time comes to explain the various financial market instruments. But you should remember that the shares do not have fixed amount of return of revenue. Actually, return is the correct term. It is a dividend which is, first of all, not fixed, so it could be changed. Second of all, it's not sure. You could have a dividend or you could have not. And third of all, it is all decisions by the General Assembly of the Assembly of the shareholders. So it might happen or it might not happen. Or it might happen soon or it might not happen soon. So this is the promised dividend. And of course, the promised dividend is only is something that's not sure. Okay, something new that we have here, instead of only having one market price as the one that you had in stock market, we here have two market prices. One is the so-called bid and one is the so-called ask price. Ask price is what you're going to pay to own the share, and bid price is what you're going to receive if you sell the share. So it is like you go for an exchange bureau here on the street in Sofia. Ask and bid price is, and you have to remember that the difference between them is called spread, and if the spread is higher, this means that there is bigger volatility, but this is another story. The point is that you cannot buy at the cheapest and sell at the more expensive. You always remember that you buy at the expensive one and you can sell at the cheaper one. Also, there is one other last price. This is the price of the last period. So this is the price at which the previous period finished, and you know that it's similar to what we had in stock market. Okay, and also there is a change column which says basically how much the price has changed from the previous to the current period. actually from the previous to the one that is previous. But anyway, this is the change in price that has happened lately. And one important issue here, all these columns, apart from the dividend, everything else is measured not in decimal, but in eighths. Not in decimals, but in eighths. So, for example, 40.1 does not mean that this is 40.10 cents, $40.10. It is $40 and 1/8 of a dollar, so 12.5 cents. Okay, why? Because this is the way the stock market, the New York Stock Exchange is working. Why? Long story short, probably for the better, but anyway, it is already there, it is working that way. So remember that apart from the dividends, everything else is not in decimals, but in eighths, fractions of eighths. Okay, also we can see that this is week number 1, and you're going to play 51 weeks. You can play as many times as possible as you want, as long as you record your score, and we're always going to take the best score. And don't forget that I want you to input. This is actually only for the sake of only for statistics. We're still going to look only the 51, the result at the end of the, actually at the 51st week. But I want you to input whatever you have at the 11th, 21st, 31st, 41st, and 51st week. And on the 51st weeks, I want you to upload your screenshot as well. One other thing here on the first screen, you can see short-term interest rate. This is going to be the only macroeconomic and the only fundamental factor that you're going to have in the game. It is a fundamental factor because the short-term interest rate, so the interest rate put by the main bank, in this case the Federal Reserve, is influencing directly the behavior of all the investors. Now, can you give me this answer? If the short-term interest rate is going higher, what happens generally, not particular to one or another stock price, but generally to all the prices in the market? If the short-term interest rate rises, what happens to generally to the market? I would like to hear your answers here. Any ideas? By the way, you should know this because you have studied economics, and you should know this. Any suggestions? So, the short-term interest rate rises. What happens to the share prices, to the stock prices, in general? Seems like you're not sure. Okay, let us think together. I'm going to ask you, instead of one big question, several smaller ones. So, if the short-term interest rate of the central bank increases, what happens with the deposits of the bank that are put in the central bank? What happens to their deposits?
They are also increasing.
Okay, they're increasing faster because the short-term interest rate is higher. Okay, then what does this mean on the interest rates that they are offering to their customers? The interest rates for deposits.
They are going lower.
If I get more profit from the interest rate from the central bank, I can afford to give higher interest rate to my customers, right? Right? So if the central bank increases the short-term interest rate, what it generally does is it basically increases to some extent the interest rates of the deposits in the economy, right? Okay, so what happens to the money supply in the economy? Where is it mostly directed then in this case, if we know that there are higher deposit interest rates? What do the people start doing when they hear that the bank interest rates have increased, the bank deposit interest rates have increased? What do people would start doing?
Saving.
Yes, they start putting their money in the banks instead of what? Putting them where? So
Investments.
yeah, instead of investing, okay, somebody remembered that there is a strict connections between.
I think it had a connection with the inflation rate.
Oh.
And when people start putting money in their bank, their consumption, the general consumption falls down, and inflation falls down, and stock market prices fall down.
Okay, now let's put the inflation a little bit further on, because you're right. This is correct, but we're only thinking about what happens on the stock market. So in reality, what happens is that people, instead of putting their money in some sort of investments, their own business or somebody else's business, they are putting their money in the bank. And yes, you're right. You remember that investments and savings are, coexisting or competing for the same money. So in general, the money supply to the stock market is decreasing. So it means that the aggregated demand of shares is what? If there are less money, the aggregated demand is decreasing, okay? So less money play on the market, less the shares are demanded less, and this means that if you have less demand, you have dropping prices, right? Okay, so long story short, if this short-term interest rate increases, basically it is bad news for the stock market, and if it decreases, it is good news for the stock market. Okay, I'm continuing with the instructions. So a lot of things here on the front screen, not a lot of things on all the other screens. This game again is turn-based, so you decide when to stop the turn. When you decide that you have done enough, you click here next. I'm not going to do it right now, but after I would like to make a transaction, and after that I'm going to do it. And you click next, and you move to the next turn. And if you want to advance with several turns at the same time, so for example, I don't know, 5 turns, then you can click here, advance, and you type in 5 and enter. I would advise you not to do so. I would advise you to click next 5 times instead of jump straight up, because while clicking next 5 times, you still have a chance to influence what happens. Okay, history is if you want to see the previous 52 weeks of history of this stock, for example, IBM, you can see 2 lines of numbers. One line is the market index. You can see. And the second line is the stock that we are looking at. This is the IBM. And you can see numbers of, and we are looking at, literally looking at the time series of the both prices, the stock price of the IBM and the price, let's say the aggregate price of the whole market index. And we can see at the end some additional aggregation. The mean is 97, almost $98 for the market index for this historical period. and the standard deviation for it is about $6 and something, and the mean for the IBM stock is 62 or 63 almost, and the standard deviation is 4.58, which, if we compare 458 to 62, is a little bit more volatile standard deviation than the $6 to compare to $98. So the standard deviation, I would like to remind you, we are going to have this as a lecture anyways, is a way to calculate the possible risk in a current situation. Anyways, this is the information which we can see here, but this information is kind of unuseful, put it in that way, unless we would like to look at these two numbers. We are going to see the same information in graphical form here. So this is the chart of IBM, the International Business Machine, and machines, and you can see what were the prices moving in the previous 52 weeks. We are currently here. The moment when we move to the next period, one period here is deleted, the whole thing slides back, and a new data point appears on the right side. So this is the chart of IBM. Okay, and next, so this is the graph. Let me show you another graph. For example, this one. Different graph. You're going to get used to look at the graphs anytime, at all times. Okay, next is the time. It just shows us how many, which week are we playing currently. We can have the same here on the first screen, so not really useful. Information is sort of a profile of the company, a very brief one, and it is. You can see the in-year high, the yearly high and low, the bid, last and ask price, and also the dividend information. All this is already available from the first screen. So if you go here, we can read all this information already here. But there are two additional things. One would be the beta coefficient. Let's not be too technical about it. It is a sort of a measurement of systematic risk, or actually relation to the systematic risk of the whole market. And the other thing is, the other new information is how many weeks to dividend is expected. So this number could also change. From 4 it could change to 6 to 8, and you might never wait and get a dividend. But for now, we can see that after 4 weeks, we would be expecting a dividend of $3.44 per share of IBM. So probably not a bad investment if we buy it at 60. This would mean that 3 divided by 60 would be about 5% return. Not bad for one single period. Okay. Then portfolio, I again remind you that the portfolio is where you're going to, this is the print screen that I want you to upload when you show your 51st week of results. Here is where you can see your portfolio positions. Of course, right now we don't have any position, but we have $100,000. The total of the value of the portfolio is of course 100,000, which is so in cash. If we have invested this in a very simple investment, let's say in a money fund or some sort of bank account, we would have get 100,000. Of course, we have not moved the game, and this is why this is still 100,000. This is what we are going to have to beat. By the way, this game, the measurement for success is that we are comparing your portfolio value to the alternative portfolio strategy, and if your portfolio value is higher, means that it has earned more, we are going to have positive difference, and this difference is what we are aiming at for better or worse score. This is what we are looking to as a measurement. The difference between your total value of the portfolio and the alternative investment strategy. Okay, and what we can do here, okay, exit, don't exit because you are going to exit the game. More some other settings don't go there, but change is where you do your transactions. And here is how it goes. I'm going to click, go on change and click enter. And here you can see the 10 shares. Actually, this is the screen by which you are communicating with your broker. And you can see going from, I'm going with the arrows from top to bottom, going from one field to another. I'm actually changing. I can trade with different shares. Here there are several important things. F1 is showing you the current price of the securities. Here everything is in decimal symbols. F2 is the bid price, so the price at which you are going to sell. Yes, and F3 is the ask price, the price at which you are going to buy, and F4 would show you, right now it shows nothing, would show you number of shares that you have from one or another of the positions here. And also here at the bottom you can see enter a number between 0 and 1244. Basically this is the information from your clearinghouse or from your broker. You can say this is how much money you have, and basically if you want to buy something you type in a positive number, so 300, for example. I'm going to buy 300 shares from McDonald's and I don't know 100 shares from IBM, and I'm going to press escape. You can see here, enter the number of shares you wish to purchase and then escape key to save the position. So I'm going to press escape, and as soon as I press escape my order has been sent to my broker, and my broker has resent it to the stock market, and the transaction has been made. And we can see that we have already some shares, 300 from McDonald's and 100 from IBM. And you can see that our portfolio position is currently 99,602, and if we have invested in a money fund, we would have 100,000, and so far we are losing. The difference is minus 397. So how come we are losing? Why did we lose money making the transaction? Any ideas? You should have idea here. Why did we lose money? Any ideas? Okay, I'm going to help you out here. What we did is we went through the spread. It is a terminology that we actually bought at above the market price, because this is the ask price. The best offer that is in front of us is the ask price, and it is going to be above the market price. The market price is typically something average. And if we want to sell, we're going to sell at below market price a little bit. And this is what we call the spread, the difference between the ask price and the bid price. And actually $397 is the difference between ask price and the current value, the current price and the market price. So if you want to make sure to understand if you're earning money or not from a current position, you can see if this number is higher than this number, you're losing money. So if this is more, basically this says 300 shares bought in the first week at the total price is 24,000 something, and the current price is 24,000 something, but lower than this. it means that we have bought higher than what our evaluation is currently. So every time you want to check if you're winning from a position or earning money from a position, you compare these two numbers. If this is lower, then you're losing money from this position. And of course, going through the spread is what I was expecting. So it's not really loss. It's just you can count it as a commission we had to pay, sort of a commission. Now I'm going to move to the next period. And in the meantime, you can see that a news flash shows up. It shows us two things: if we have dividends, and what happens with the cash that we didn't spend. The cash that we didn't spend in our portfolio is going to always be invested in the same money fund as the benchmark investment. So we're not going to lose money from having our money in cash. Okay, so let us see what happens here. All right, we are actually a little bit losing money. We can see we bought this for 24,300 something, and now it is 24,200 something. Actually, if you remember, this was 24,000 something. So the price has gone up, but not high enough so that we cover the spread yet. So we need to earn more before we can get out of this position. And here we have simply lost a lot of money. Okay. And if I want to sell, I'm going to show you how to sell. Again, I'm going to the change, and I'm going here. For example, I would like to sell IBM. So I'm going to, in order to sell, I'm entering minus, so negative number. So I want to sell everything. How do I know that I have 100 shares? I can see here that it says I enter a number between minus 100 and 1294. Or I could have pressed F4, and I can see that I have 100 from these and 300 from the others. So I'm going to sell the IBM and press escape, and I just sold IBM shares. And also you will see that I have even less money, so even bigger of a difference, because I just went through the spread again. I just sold. So long story short, don't go through the spread if it's not entirely necessary. In the stock market game, you didn't have a spread, you didn't have a commission, so you could have bought and sold everything every time, every period. But here, don't do redundant operation. Okay? And also I can see the stock market, what has happened, well, mainly dropping down, and especially IBM dropped down with a lot. So this is the game in general. What I'm going to, yes, what we are going to do is you play the game until Monday evening 8 o'clock. So you have plenty of time until then. I'm going to redo the leaderboard so that you can see your own scores. Don't forget to upload on the 51st week. You upload your screenshots. And yes, one important thing here, in this game you cannot take any short positions. This is a simplified version, only long positions. So if you know that the market is going up, you can buy now, wait, hold, and sell later when it is more expensive. Buy, hold, sell. This is the long position. The short position is impossible. So if you think that, if you know that the market is going down, the only thing that you can do is wait for the market to start going up, and then you can buy, wait, sell, buy, hold, sell. Well, this is it. Do you have any questions?